What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today's episode is going to be your special weekend update. I want to go ahead and take a look at the broad market and see if we're likely to go higher or lower in the upcoming weeks. So first up, let's go ahead and take a look at the S&P 500 SPX index. So let's crack open this chart and see what's going on in the stock market today. Alright, so first up, let's check in on our bear bull survey and try to figure out if the sentiment in this market is bullish or bearish. So as of the week ending January 20th, we can see that we're now at 42.5% bullish sentiment, which is a little bit of a decrease from back in January 6th. We can see we do have some more bears, and we have about the same amount of people that are still neutral in this market. So what I usually like to do by looking at this survey is I try to figure out how much cash is likely still on the sidelines by combining the bears with the neutral. So if you combine these two numbers, we can see that there is still more cash on the sidelines than there is cash in the market. If you look at the average retailer, there's still more bears and neutral people than there is total for bulls. Why is this significant for the stock market? If there's still cash on the sidelines and the market is still in a bull cycle where we're going up higher and higher, eventually these bears and these neutral people will eventually buy into the market. If they're shorting the market, they will eventually get short squeezed and they will have to buy in at higher prices to cover their short positions. So it's very important when you're looking at this survey that you don't become bearish just because there's a lot of bulls. There's still a significant amount of neutral and bearish sentiment, which means there's still a lot of people that are getting out of this market the higher it goes, which can actually only add fuel to the fire and could send the market even higher. So I don't see anything in this survey that says we're likely near a market top just yet. We'll see a lot more bulls than we will have on bears and neutral when we're near that market top. So let's jump back over to the SPX chart. And the first thing I want to pay attention to today is that this is a weekly chart. So every single candlestick does represent an entire week's worth of price action. So point your eyes towards this pink line here, which is a very significant trend line, which has been calling the market top going all the way back to the bottom of 2009. You could see here in 2018 at the top in January, this trend line did call the top and we did see a correction. We did not return back to this trend line until February of 2020, and you can see it got rejected at that trend line yet again, and that was the crash that we had in March. We reached the trend line yet again in August of 2020, and again it triggered a correction going all the way through October before we finally tested that trend line again in November of 2020 and broke through that trend line. So when you break through a trend line that has been acting as resistance, it's very likely that that trend line will now become a support trend line. When resistance is broken, it becomes support. So we still want to pay attention to that trend line. And you can see the more weeks we spend over that trend line, the more and more likely this breakout is the real deal. And that level will act as support when the time comes. So now I want to go ahead and zoom in on the price action. And we can see last week that we had a very bullish week. And we're still trading over the 5 EMA on this weekly chart. You can see the upper Bollinger Band continues to expand, which is giving the S&P 500 more and more room to continue to head higher. I've mentioned this in previous videos, but my price target for 2021 on the S&P 500 is up here at 4,040. From last week's close to my price target for the year 2021, we still have a little more than 5% upside until we get to that target. Does it mean we have to run up to that price target in a straight line? Absolutely not. But I do see the stock market getting towards that 40/40 level in the SPX index before the year 2021 is over. So I'm still very bullish on this market, and you can see the trend is still extremely bullish and it's actually picking up momentum. All of these moving averages are stacked to the bull side and they're all positively sloping and they're in trend mode. This stock market is a very strong bull market and it's just continuing to head higher because the trend and the price action are very bullish, which means we're likely just going to continue to head higher until we see something shift in the technicals. Now, another thing I want you to note about that trend line is if we do go through a correction, and I told you that level should be a strong support, we're looking at a little more than a 5% pullback before we get into very strong support levels. That doesn't mean we actually have to pull back to that trend line. We could find support somewhere before that level. But just saying if we do pull back all the way to that trend line, that's only about a 5% drop. So even if you're getting bearish on this market and you're trying to short this market, there's a lot of upside for only a potential 5% downside. Can the market drop more than 5%? Absolutely. But I don't see any reason to believe it'll happen until we see proof in the price action or the trend that tells us that this bullish momentum is starting to reverse and the market's starting to roll over. Remember, right here on the Stocks channel, we do objective analysis and we don't try to call a top just because the market's going higher. In bull markets, the market continues to go to new all-time highs, and that is what defines a bull market. Bull markets are strong trending in the up direction and they're constantly setting new all-time highs. That's no reason to become bearish, and that's no reason to try to short this market. So from last week's close, we have about 5% downside to significant support and about 5% upside to potentially significant resistance. So the market could continue to trend upward, but it could also equally start to sell off. But my point about the selling is that we will see it in the price action, and we don't currently see any signs of a reversal or a correction just yet. Now, the other thing to note about the SPX is that we've been trading over the 5 EMA ever since the end of the election. So this market is very bullish, and it's been bullish for a few months now. So this market could continue to stay over this 5 EMA, and we could see weeks like 2 weeks ago where we did see some selling, but we're still holding up above this support level, which is the 5 EMA on the weekly chart. So this has been a very critical support line for this bull market, and this market will likely continue to head higher until we get a price action close below the 5 EMA. So it really is that simple. We can just watch this weekly chart week by week and try to see if this trend is going to show any signs of weakness before we get to that price target at 40.40. I also want to say, if you're having trouble treating this market objectively and you're not able to find a way to make profits in this bull market, consider checking out the Stocks Channel Discord, where we're absolutely crushing this market with a disciplined and profitable trading community. You can find out how to join the Stocks Channel Discord by clicking on the link in the description of this video. So the next thing I want to do is jump over to the NDX, and this is still a 1 week chart. So every candlestick is 1 week's worth of price action. But now we're going to take a look at the NASDAQ 100 NDX index. So on the NDX, you can see the price action is still trading over the 5 EMA. And we also have a very strong bullish trend with all of these moving averages trending to the bull direction with a positive slope. Now my price target for the NDX is up here at 14,488. And from last week's close to that price target, that's a little more than 8% upside. So there's still a lot of upside left in the SPX and the NDX according to my price targets that I think we will reach in the year 2021. Does that mean we go to that price target in a straight line without any selling or volatility? Absolutely not. Of course, there could be some chop and there could be some volatility and small corrections on the way to that price target. But in the long term, remember, we're doing a macro level view on a weekly chart. That seems to be the price target and the direction that the stock market is heading. Also, once we hit those price targets above, we could see a much more significant correction, and that's when we could start to see a 10-15% pullback. However, I'm not trying to speculate right now. I'm just saying it's possible once we get to these critical levels that the market will need to cool off before it can start heading higher. So on the NDX, you can see we broke through my other price target that I had for last year at 12,773, and we did test that breakout as support and did get a confirmation bounce. So these levels that I have in the market are absolutely significant, and they are being respected by technical analysis. So technical analysis has been the best at calling this market, because if you're going by fundamentals, you're probably wondering why the market continues to go higher. But this market has also been very technically sound, and the technicals have been telling us that the market wants to go higher. And as you can see, the market has been continuing to go higher. I've been very bullish ever since the end of the election, and you could go back to my videos in November where I was saying the market is likely to melt up and we're likely going into a secular bull market. I still fully think that we're going into a secular bull market, and I see any dips as buying opportunities, because in bull markets, you want to buy low and sell high. You don't want to try to short in a bull market. That's called trying to call a top, and even if you're successful in shorting, you're more than likely just going to get lucky if you short at the exact right moment. A lot of people short way too early on, and then they get burned because the market continues to head higher, and when that correction finally does come, it doesn't go as deep as they were expecting, and they still end up losing money. So as long as we're in a bull market and we see a bullish price action and bullish trending market, you really don't want to short. You want to look for buying opportunities, and you want to try to buy good stocks on the corrections, and you want to ride them higher as the market trends higher. So you could see the SPX and the NDX are likely heading to higher price targets, and we still have anywhere between 5 to 8% upside before this market reaches some possible significant resistance levels. Don't forget, we still have plenty of support below, which I do think are buying opportunities on the way to these price targets. So there's still plenty of money to be made in this market in the bullish direction until we see something shift in this trend. So if trading this market sounds like something you're interested, don't forget to come check us out at the Stocks Channel Discord. I hope you're all having a great weekend, and I'm looking forward to another exciting week of trading coming up. So thanks for watching this special weekend update. I hope you all have a great rest of your day. And as always, I will see you in the next episode.